Welcome on board Avinash Godkhindi, the MD and CEO at Zaggle, to talk about how their business has been. Avinash, hi, morning. Great to have you on the show. Let's talk about your recent acquisition. This is meant to mark your entry into consumer credit card segment and even UPI. Give us a sense about the strategic vision here, as well as what is it that we can expect these segments to start contributing to your revenues meaningfully.
Good morning, Aisha, and thank you so much for having me on the show. Yes, it is the differentiation that we have now with such a large consumer base, almost 35 lakh plus consumers on our base, and we felt it was the right time to start offering, a UPI solution through our app as well as a co-branded retail credit card. Retail credit cards, as you would know, are one of the most profitable businesses for banks. And we see that as a great opportunity to be able to tap into a segment of largely employees of blue chip companies that we have. The safest segment for lending or any credit card product. So that's something that we're very bullish about. We are looking over the course of all these 5 years to hit an annual revenue of about 500 crores from this business and an EBITDA of about 50 to 60 crores.
Okay. Avinash, talk to us about the latest wins that you've had and how should that spur demand going forward for you? Is there going to be better breadth with regard to product sales on the wins that you're having? Trying to get a sense of that.
Yeah, the wins have been very good. We've been only sharing the bigger ones with the market just to make sure that the impact is correct. We just recently signed up with Mastercard, where we get additional basis points of spends for all the spends that we bring to Mastercard. It's just a simple testament of the volume that we've now started to do on the commercial card or the corporate credit card, and Mastercard recognizing the value that we are bringing to the table. So every new customer spend that comes in, we get additional basis points, which hits straight our bottom line. So it's going to be a sizable impact in the coming quarters and years.
And Avinash, what should the outlook for FY26? You've got a very, very strong outlook, right? 40-45% growth. On this base, you continue to guide for 40-45%. How much of this are you penciling in coming in from new clients, and how much from existing clients where you are improving the breadth in terms of product sales?
So we're doing both. A lot of it is coming from existing clients. A lot of it is going to come in the coming years from new clients. In our business, a new client does not start adding revenue straight off the bat. It's typically there's a lag of at least 2 to 3 quarters before they start adding meaningful revenue. And if the size of the client and the complexity is higher, it can take maybe another quarter, right? So a lot of the growth that we're talking of here this year and the next year is already, baked in, already sales that have happened, already, contracts that have been signed. The contracts that you're signing now are going to add to the, growth in the coming years. So that's the nature of this business, and that works very well for us because it allows us to be much more predictable than a lot of other businesses, because we internally have very clear line of sight as to where the revenues are going to come from and broadly what the margins are going to look.
Avinash, so in terms of positioning, are you planning to compete with, say, a Slice, Uni, etc., or are you aiming to build a very differentiated niche product via RivPay?
So it's going to be a differentiated product, Aisha. We are looking to be much more profit focused. It's not going to be a race to who's giving more rewards. It's going to be very personalized, leveraging a lot of AI, and making sure that because we know these users, we know these customers, and we've been serving them for years, we've not necessarily done something with them in terms of credit cards or a retail product, but they've been our customers, our holders. They've been on our app for quite a few years. So we have good insights on their behavior, and we will be very targeted and curated and bring real value to them rather than just a carte blanche sort of so much reward or so much benefit that goes to everybody.
But tell me, Propel is still your biggest revenue contributor, right? But you mentioned earlier that your platform Zoyer has the biggest use case and will overtake other businesses. How do you see that happening, and what's the roadmap there, really?
So Propel continues to grow, Aisha, but Propel points is a gross number. The rest of it is a net number. So the software fees and the program fees are net numbers. So if you look at it on a net basis, Zoyer is already the biggest and is contributing a lot. Propel continues to grow, but that's a use case which is for channel partner incentives versus a Zoyer where the use case is for vendor payouts and tax payments, etc. That's a much larger use case. Every company has vendor payments to make. Every company has some of the other tax payments to make, indirect or direct. So the use cases in Zoyer that come in, and especially Brome, which is our branch recurring operating monthly expenses, where we are seeing bunch of industries, whether it's diagnostic centers, whether it's retail, whether it's insurance, whether it's banks, across board, anybody who has more than 20, 30 stores or outlets, they seem to have a petty cash issue, petty cash leakage, a problem with managing their utility bills. So some of the largest retail chains in the country have signed up with us, and we are rolling them out. In the coming years, you'll see a tremendous traction through Brome, which is a module in Zoyer as well.
And this acquisition that you've made, Avinash, give us a sense of that. So Green Edge Enterprises Private Limited, what does it do, and how does it add to your current suite of products, if I can ask?
Oh, Green Edge is a brilliant acquisition. They do golf privileges for a bunch of banks like Amex and ICICI and Kotak and IDFC First and AU. And they have a supply side stitched up globally, right? So there are golf courses around the world that they are able to offer to, golf patrons of these banks. They also run the rewards platform for NPCI for their platinum and select credit and debit card rewards. So it's a very large opportunity there just with NPCI. And potentially to be able to take reward programs to other banks. So that's again a great opportunity. And because we are already working with 19 banks, and to take golf privileges to those banks, already the company is doing phenomenally well. Their numbers this year are going to be probably about 70 crores, 65 to 70 crores of revenue, and that's almost a 2x plus jump from last year. And similarly, is likely to grow more than 2x. So they're doing extremely well, and it's a very profitable acquisition for us if you look at it in terms of the valuations that we have given.
Okay, Avinash, we'll let it go on that note. Thank you so much for joining us and giving us that perspective.